Jamie?
Hello, Scott. Thank you very much. Steve, what is happening?
Oh, not much. Happy Monday.
Yes, happy Monday it is. Matter of fact, it's March 11th, 2019. Welcome to another edition of Office Hours. I'll be your host, Jamie Hodge, and I've got my trusty wingman, Steve, going to be manning the questions panel as well. So before we get going here today, let me just get rid of this and go over the legal disclaimer. Kind of temper everyone's expectations. I know you regulars are already familiar with this, but if you're new in the room, I just like to always make it a point to let everybody know that the information that we share with you in these webinars, whether it's this one or the other 8 webinars that we conduct throughout the week, all the information that we share with you is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that can legally assist you with that type of advice. All right, I think that's good enough. Always like to take a moment here for the new people, and I can see a pretty good crowd for a Monday. Notice it's been going up steadily. So bear with me, you regular attendees, while I talk about these webinars that we host every week. We all kind of get going here. And pardon me, guys, had to clear my throat there. The allergies in Texas are trying to kill me. By the way, I've been having a little bit of spotty internet connectivity issues today. It doesn't last too long, but if you hear me bleep out for a minute, hopefully it comes back. Hopefully we'll be bleep free here, but just in case. So up here on the left, the trading room hosted by Mr. Barry Anderson. That is a free trading room that we offer here at the Trade Ideas community. I do know that Barry's been converting over to a brand new super duper software for the chat room, which looks and sounds great, has a lot more functionality.
It's pretty cool.
Yep. So we're all happy about that, especially Barry. So if you haven't been taking advantage of that resource, by all means, you need to get in there and see what it's all about. 400 or 500 people in there on a daily basis. Barry does a great job not only at showing his trading style, but also showing how he uses the Trade Ideas technology to find the trades that he is putting on. Best thing about the room, other than Barry, the price, it's free. Okay, and if you shopped around the web for comparative trading rooms, you know that none of them are really free and they're not cheap either. So take advantage of that resource. You'll be glad that you did. Now on to the 5 o'clock Eastern webinars, which of course today's Monday. You got myself and Steve. Then on Tuesday, Mr. Gomez is going to take the helm for the trade of the week. Andy Linloff rides shotgun with him. Wednesdays, we got Dan, the CEO and founder of Trade Ideas, along with Brad Williams, our Chief Technical Officer. Always interesting with those guys. Always giving you an idea of the technology and the features that are coming down the pipeline, along with their own brand of stuff there. Thursdays, that's when we round out the 5 p.m. Eastern webinars with Andy's Trading Studio. I ride shotgun with him. And Friday, we changed it up just a little bit. We have the free-for-all Friday support session, anything TI related, whether it's about Brokerage Plus or you need help tweaking a strategy. That's what Friday support sessions are for. We start the party at 11 a.m. and we keep it going until around 2 p.m. Eastern, still getting record crowds in there as well. So quite a few webinars going on the 5 p.m. slot, and then we change it up on Friday. And then let's talk about TI University. TI University runs Monday through Thursdays, beginner 101 on Monday, 201 Tuesdays, 301 Wednesdays, and 401 Thursdays. So really great if you're new to Trade Ideas because you can learn everything from the ground up. You know, we used to do the complimentary one-on-ones, but client base is getting too big for that, and we only have a limited number of seasoned traders here. So that's what TIU is for. We do recommend that you take these in order because you'll need what you learned in 101 to build on 201 and so forth and so on. So these start at 12 p.m. Eastern every day, Monday through Thursday. And you can sign up for those and get on the list and get over that learning curve quicker is always a good thing. Always like to show how the AI has impacted us in the form of new accounts or new users, we could say. Scott was just talking about the AIs and the premium package. The first AI came online, very first of 2016. We all remember it vividly, and boy, how she has evolved since then and has spawned a couple of siblings as well with Holly 2.0 and Holly Neo. So we've got 3 AI modules, and chart speaks 1,000 words here. 2017 record amount of users. Last year record amount of users. Would expect the next bar here at the close of 2019 to follow suit. So AI is being received well by our crowd. All right, on to today's agenda. And of course, what do we have today, Steve? We had a nice little gap up, not the biggest gap up, but a gap up nonetheless. And then we had a little strange activity between the big indices and the Dow. And I'm sure everybody by now knows why that occurred. So if you're ready there, compadre, I guess I'll kick it over to you. We can take a look at those things. You with me, Steve?
So did I throw myself back on mute? Apparently I did.
Happens.
Can you hear me? All right.
Yeah.
So I'm just playing around over here with a little something before I go to the trade ideas charts. Since we don't have a Fibonacci, I was trying to see something here. Let me see if that's, nope. Here we go. This thing's being fickle. So I'm just going to draw a quick Fibonacci. Oh, okay, interesting. It's kind of what I thought. I'm playing on the bigger picture here, guys, and what I'm drawing is the low to the high. It'll make sense here in a moment. This is on a weekly, but the most important thing here is the price found itself a 50% pullback off of the big lows that we had. So let's go back into our trade ideas charts. So what I was saying is this pullback here on the daily, we're back on a daily time frame, and this was basically a 50% pullback from this low back in February of I guess that was year and a half, February 17th, into the highs. So a 50% pullback. Where I'm going with this is I'm going to zoom out, which we just did, and we're going to kind of zoom back in. So 50% pullback. These are the kind of things that bull runs need. They need a pullback to get some more inertia to move, attempt to move back higher. So now as we kind of zoom in on the SPYs here, I'm going to catch up to what we talked about last week. We kind of joked around that last week, the market was starting to show, signs of buffeting, which an airplane does before it stalls. And a lot of times we'll see some divergence. I won't get into that, but there's definitely, for those that look at oscillators, stochastics, or RSI, there was divergence. J.C. Peretz talks about this a lot. It's one of his favorite indicators, and it's one of my kind of second favorite indicators, but I don't have it on here. I'll look at it for the bigger picture. For lack of a better moment, let's just illustrate what I'm talking about here. So I'm going to go back to the daily charts on S&P 500, and I actually had it drawn in here, and I actually Twitter added J.C. Peretz and said, hey, are you seeing the divergence I'm seeing? He said, yes, I am seeing it. What we mean here is there was a higher high in the SPYs, just barely, that big red candle, but still a higher high. But the stochastics and the momentum oscillators like RSI wanted nothing to do with it. It was a lower high, then plunged rather quickly. This was an early warning signal of price action probably stalling and getting ready to fall. And in this case, it actually did work out. So let's go back to our picture. And so we laughed last week about the term monkey bath, meaning this market needed a shower. Well, we just looked at the 50% pullback on the bigger picture from a couple years ago, big move, but we needed that. We needed this. Okay, at the time we didn't know if it was a bear market or a correction. Hindsight tells us it was a correction. But then we got to last week's webinar and we saw this little reversal day, and we said, well, that little reversal candle was nice, but this market needs a shower. And what it had that day, last Monday, was nothing short of a monkey bath, just kind of splashing water in your face at the airport. And then in my webinar the next day, I said the same thing. We need some sort of a shower, some sort of a pullback to get some relief from this big move that we've had over the last couple months. Ideally, I would have liked to seen something right into that level, which was a great pivot level. And not only was it a great pivot level, It was also what do we got? Right on the 50% pullback. That's what I would have loved to have seen. Would have loved to have seen something come back deep into this area, but we didn't get that. And so we're not always going to get what we want, and we got to live with it. So that being said, I need to move forward here a couple of days. Oops, come on. There we go. That being said, we got, a quick shower, whatever you want to call it, a rinse off, a rinse out of the pool. That may have been enough to do the trick. And the trick, what I mean is, trying to set up some sort of a cup and handle. Maybe we didn't get the full deep pullback that I wanted, but nonetheless, if we zoom back out here, we can kind of see the significance of that again. The significance is we're going to run right smack into these levels yet again. We have a date with these levels again, just like back here and back here. So a decent close today, closed above that 10-period moving average, closed strong, but we're going to probably have a date with this level again. What's going to happen when we get there? I snuck the word but in there. The but was the declining volume, or more so the volume today was extremely light on the S&P 500. Let's look at the intraday real quick, and then it gives us another great example of how to gauge momentum using my favorite 10-period moving average on a 15-minute chart. There was not a moment at all today where the price action backed up and breached the rising 10-period, which gave us a really nice momentum candle on the daily chart. But typical gap up, and then as soon as that moving average comes into play, it kind of kicks the price back up higher. So that's the kind of day you would expect when you see a big green bar like that. Again, I think where we're going to go is right back into these levels up here in the spiders, the 282. We'll see what happens when we get there, but this low volume wasn't really exactly exciting. Let's take a look at the NASDAQ and the Qs, the form of the Qs. Also, kind of a light volume day. Similar action, but again, we're going to run right back into these resistance levels in the NASDAQ. And IWM had also kind of relatively low volume, but you can see they're all pulling back, all bouncing back from the 5-day sell-off that we had roughly last week and closing on highs, which tells me we're just looking for a reason to come back up. Let me grab that line and test these levels of resistance again, possibly this week. We shall see. A quick note on the SDSs, which was the trade of the week last week. I'll talk about this more tomorrow. But, you hear me say a day and a half or 2 days. Once you start to get that real nice move, after 2 days or so, you're starting to live on borrowed time. And what happened was this candle opened right here, and SDS had 3 or 4 really nice days of movement on the trade of the week. But I tweeted out on my social media, you might want to not look a gift horse in the mouth. When you get nice gap ups after a couple of days of really good movement in your direction, you got to take some profits. So, hopefully some people did there. We'll talk a lot more about that tomorrow. Today is not the theme of the trade of the week, but tomorrow is that for content. So we'll address more of that tomorrow. Also, curiously, this week's trade of the week did not trigger. It was a gold miner. On Friday last week, the gold miners were super strong. I mean, at the top of my ETF list, a lot of weak sectors, but gold was super dark green, super strong. But today, just like this market does, it turns around and does the complete opposite just a day later and gives you a difficult look for lack of follow through in a sector. So it's possible the gold trade of the week, which again we'll talk more about tomorrow, is AU. It did not trigger. That blue line remained intact today. Maybe today was a final day of washout, and tomorrow we'll assault that line, but we'll address that again tomorrow. And that's all I really have on what we're looking at. Again, the big takeaways are we have a date probably again with this incredible level that we've been testing so often. Would have been nice to have a deeper pullback, but we'll take 4 or 5 days and a shallow pullback and see what happens if there's enough strength to get back through that orange line that's been the line of the sellers. And that's all I got, Jamie.
Thank you, Steve. Always enlightening. Let me grab it back from here. And before we plunge into the content here, just, why was the Dow gapping down? Well, I think everybody knows by now. Boeing, the second 737 dropped out of the sky, which is definitely a bad thing for old Boeing here. So, but the Dow pretty much recuperated pretty quickly there. So, in case anybody was wondering, I was like, well, what's going on? And then it dawned on me this morning, well, Boeing. So yeah, some nasty business going on over there. I hope they get it figured out. Now, let's talk about our expectations. Right about 15, 20 minutes after the open today, we already knew the market was gapping. It pretty much opened right at the bottom of that 15-minute candle. I mean, you can hear me now, Steve, right? I'm not on
Yeah, we're
mute.
good.
Okay, perfect. Okay. And then just boom, 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 off to the races. So this being the first 15-minute candle here, what I typically like to do is take a peek at my big cap compare count window, and boy, talk about bullish bias today. Actually, I was a little late on this one. I was 17 or 18 minutes in, but you can see here that's not going to really make a huge difference one way or the other. And I always like to kind of throw it out there and say, a decent bias is 55%. Anything above 55%, even better. Well, looking at what we had today, 68% stocks that have large market caps in excess of $4 billion hitting highs in that first 15 minutes versus the ones hitting lows with the accelerated 1-minute volume intact. So when you see numbers like this, a lot of the times it definitely means something. Compare count windows, just like any other metric or study that you like, they don't work all the time. But there are certain times where you see certain readings and certain chart setups where, you have to pay a little bit more attention, and today was certainly one of those days because after that 15-minute count right there, boom, the rest is history. So a beautiful up day, as Steve was pointing out, just, hugging that 10-period moving average like a glove. So a great up day, and, when the market's doing this, there are going to be plenty of stocks doing the same thing. However, we'll get into some of these at the end here. Not a whole lot of really big moves, but some nice consistent up moves and some nice continuations from some of the stocks coming out of my turbo breaks up with no resistance here. And we'll take a look at those towards the end of the webinar. Let me find my spot here. So let's just jump right into the Holly recap. Holly ended up posting a pretty good day today. We'll just kind of sketch over the metrics here and then take a look at the trades. We've got some risk off, risk on examples. DocU is a great example of trading early because it was spawned by the sunrise movers alert, which typically spits them out pretty close to the open. But as we all know, the market is crazy on the open. So, a lot of the times that action can be a little bit fickle, but we'll take a look at DocU and how you could have managed that trade, even though it was a stop out. Then towards the end here, we're going to talk about calculating slippage and commission. I've started doing this because, as everyone knows, Brokerage Plus coming, being released, and then more importantly, the ability to automate Holly strategies is not too far down the pipe here. So I'd like to take, this opportunity to kind of temper everyone's expectations about if they're going to trade Holly. And specifically, a lot of the questions that we've had pertain to, well, what if I take all the Holly trades? What can I expect? So we'll go over these numbers, and I'll attempt to help you guys check your expectations if you're one of the people that's just chomping at the bit in order to automate Holly. Been doing that myself here over the past, man, it feels like an eternity and a small time at the same time. Probably been about 6 weeks, though. All right, so let's just dive right in here. I've got all of the Holly trade blotters up here, Holly 1.0 up here, 2.0, and Neo towards the bottom here. And I always like to cover risk on and off examples, and then sometimes we have what we call a trade around in there, which the DocU is probably going to fit that bill. So we can see right here, I'm going to click on DOCU, triggered by Sunrise Movers. Steve and I were talking about this trade earlier. Now, what do we see here? We see it ended up with a decent gain if you just held it of 60 cents. But look what happened here. Holly got stopped out. We got stopped out in essence. So what I'm going to need to do here, since we can't really see a whole lot of the action here in the 15-minute candle, and by the way, the sooner you start trading, the more sense it makes to, go smaller time frames because you can't really see any candle patterns developing. So on this little guy, we're going to have to kick it all the way back to a 1-minute time frame. Bear with me while I scroll madly to get back here to the open. Let me see if I can compress this just a little bit. Okay, here we go. A little bit more. Okay, get this where we can make sense of it. Now, what you're going to see here is a pattern, is a pattern, is a pattern. Kind of fits the bill for what I like to talk about, because for you regular attendees know I love the range breaks for their simplicity and some simple volumetrics and risk parameters. If you get used to seeing these things, they're very easy to identify. You're going to be hard pressed to find a more simple chart pattern most of the time. So let me if I go, hold on here. Well, I thought we were on the right. Bear with me here, ladies and gents. I know I'm not getting my arrow. I'm like, where's my arrow? Okay, so this is a good time to point this out. I clicked on Holly 1.0, but notice I'm on Holly 2.0 in my strategy segment. So there we go. We have to put it on here. Now when I click here, come back, it should be, oh, Steve, I'm still not getting my arrow, it seems. Well, I'm getting my arrow now. I'm just used to seeing them down below, so staying on me. Okay, so here we have the open, right? We get a Holly buy signal.
Is your Holly segment number 1 on?
Yeah, Holly Grail right here. But you know what I'm talking about, right? The arrow used to be down here. But anyway, that's minutia.
I've got it. That's interesting. Okay.
Minutia. Okay. In any case, we get a Holly buy signal right here. What happens? We get in the money, and then we come down here and get stopped out barely. All right. Now, originally, Steve, I was mistaken. I thought the signal came out a lot earlier, 8:37, which, look, I'm still convinced it should have. Okay, so 7 minutes in. Bear with me, ladies and gentlemen. 1, 2, 3, 4, 5, 6, 7. Okay.
You're on a 1 minute, huh?
Yep. Yeah, that's right. Okay, look, 8:37. All right. So we did get a stop out. Came down here and barely tickled it right here. So this would be a good example of a trade around, right? You see Holly get stopped out of something. What do? You look at it. You pay attention to it. It's the same thing as seeing one of your buddies get stopped out of something and then going, well, they got stopped out. Maybe I should take the trade here.
More interestingly, though, is the time of day, too. That's what we were talking about also.
Right. So got all tangled up in that. So what Steve is pointing out here is the open is very tricky, right? You can make a lot of money in the open, but you can also get steamrolled if you don't know what you're doing and you're not quick enough to manage your risk.
And there's a lot of reversals, guys.
So there's a lot of up and down, seesaw, razor blade with the algos in the morning. Matter of fact, it reminds me of what you used to say all the time, Steve, when you and Andy were doing ditto trade. You just pulled the stops at the open for the first 10, 15 minutes.
For the come out roll, for those of you who are familiar with craps, you can find that come out roll, which is the first 15 minutes of stop hunting in the markets each day. Then you're good on the game of craps in the stock market.
Right. So how could you have capitalized on this? Say you weren't in the trade, you saw Holly get stopped out of it. Well, a good rule of thumb is, you can establish some lines and go, well, if it comes back up, if it establishes a little bit of support above the stop, right? What happened right here? We got stopped out, just barely hugging that stop area. Higher candle here, another wick down here, and then boom, it gets traction. So, just playing a little line drawing here. As soon as it cracks that high again, it could have been a good time for another entry here based on what you saw happening with Holly on the stop out. That's where the majority or the lion's share of the move occurred. So a lot of the times, just because we see Holly get stopped out does not mean that the signal is bad. Interesting point here is that the statistical probability for these plays is good for the day. Sometimes the timing is just a little bit off. So this would be an example of what we call a trade around. You see Holly get stopped out. assuming the thing doesn't keep spiraling down and hugging that line. A lot of the times we can get a good entry signal from a Holly stop out. We're going to have functionality in Brokerage Plus that allows for second entries. In other words, you can set up your strategy to say, if I get stopped out of this one, or any trade for that matter, I can say attempt a second entry. You could even say attempt a third entry, right? But if you had your software set for second entry, you get a stop out here. As soon as it comes back up here and punches the blue line again, which it didn't do until 8:42, it would have made a second entry, and you would have been in this one. All right, so that's the type of functionality that we're building into Brokerage Plus and the Holly strategies, which is why we're a little bit behind schedule on releasing it. But we want to make sure all the bugs are ferreted out before we release it to our users because, well, for obvious reasons there. So an interesting example today of a stop out, a trade around that would have been great if you had your software set for, hey, I understand sometimes these things get stopped out, sometimes a second entry gets the job done, and this one is a classic textbook example of that, which will be in the automated function. All right, another good example of what we call risk on here. Let me get off of these horrid 1-minute candles here. All right, back to business as usual.
Hurts my eyes.
I know. Okay, a little bit different of a story here on good old Z. All right, we get a buy signal right here, right at the whole number, which, there used to be whole strategies configured around a whole number, right? Because the action gets kind of crazy there sometimes. All these stop orders or buy orders get triggered. Not so useful these days in the algorithmically ruled marketplace, but just happened that this one was right on the whole number. What do we get? We get a nice little pop upward in the next candle, a little back and forth here. And this type of action is very common. Matter of fact, some of the best trades that I've picked from Holly in the past have come from these, where you might get up a little bit, you might get down a little bit, but no profit target is hit, no stop loss is triggered there. Of course, we got kind of close there, but no stop out. We go in and out through this entry line, hugging this entry line before buyers and sellers do not become or not equal anymore, and the buyers take over, and boom, we push it out to a new high. Now, what I like about this chart as well is the secondary pattern evolving outside of what we get from Holly. We're getting statistical probability from Holly and Sunrise Mover after everything was said and done from the analysis on adding Friday's market data to the strategy, and Holly did her magic with it, optimized it. 59.4, actually the lowest man on the totem pole today, but this one worked nicely. You can see this one only performed at 50% today. Sometimes a strategy will overperform, sometimes it will underperform. So Sunrise Movers was 2 of 4 today. But what I like about this one, after the fact, we're in it, we're ebbing and flowing up and down a little bit. Once these bars start forming, and we get out here, what catches my eye? Well, if we come up here and break this plane right here, that is indeed a nice solid range break. So, it's a good sign. Hopefully means the stock's going to move higher, but more importantly, gives you the opportunity to leverage the position. All right. Say you're already in 100 shares with Holly. Trade is working, kind of ebbing and flowing around here, but also too, what's it doing with that 10-period moving average there, right? That 10 period's acting as that trampoline, gives us a little bit additional confidence to stay in the trade. And then once this area right here is penetrated, boom, we could have just stuck with what we had or doubled up on the position and enjoyed the rest of the move up here. So nice tight trade from Holly 1.0 on the Z trade. Now let's look at one that would have been a little frustrating, right? Because what do we see here? We see a nice spread. Holly pulled the plug early, and in retrospect, probably wasn't that bad of a call. Profit save, right? Get the entry right here, and then 1 bar, 2 bars later, bam, right through that stop loss. Very, pretty tight for that type of stock, but that's what was assigned. It was a profit save. smart stop of 38 cents, and just kind of a wide range stock here as it ebbed and flowed. Now, Holly pulled a plug right here, right, for a flat. In retrospect, not a bad move because she would have got stopped out on the following bar, right? Another stop out here, another stop out here, and just couldn't really maintain anything above the line. As fate would have it, at the end of the day, sure, the buyers came out of the woodwork and then ran it up. So that's why we're seeing 44 cents if you held to the close, but you would have had to sit all of these vacillations, right? So not one punch through the stop out, not two, but three and even four right here, because that just barely tickled it right there. So while this one looks nice and juicy in retrospect, and quite frankly, don't see these very often, but this one would not have been that viable, right? As it punched through the stop loss area, not once, not twice, but 3 times there and 4 over here. Other than that, we can see we had a little, difference of opinion here. We had risk on winning the day on Holly 1.0. We had it winning the day on 2.0. But Neo, typically who is the riskiest of the bunch, did all of its work on risk off. So needless to say, we're not going to see hardly any spread here between risk off and risk on. We're going to see a tiny bit, but nothing to write home about. An extra 34 cents in SMTC, but after that profit target was hit, as Steve said earlier in the last trade of the week, not today's, but the one before, once you get a nice little lift like that, it's probably better not to look that gift horse in the mouth. Getting the profit target hit, what do we got here? 24, about 26 minutes after the entry, which I'm going to backtrack a little bit here, ladies and gentlemen, but look how quickly, what was that? Yeah, in DocU, you were stopped out like almost instantaneously. I forgot to point that out. Like we have an entry time up here of 8:37:59 and a stop out at 8:38. That's about the fastest. That's about the fastest you can do is 1 second. In any case, just thought that was interesting. So you could have held on and made an extra 34 cents on the SMTC, but not exactly the smoothest chart action once you got up here. If you did take the money up here, great. If you didn't, you're probably cringing a little bit as it takes a pullback before it sets a new high. But once again, what do we have here? We got the 10-period average kind of acting as the guiding hand there, and that can always give us a little bit of confidence to stay in something, but not get too greedy. Other than that, in ARES, what do we got? An 11-cent spread here and a 3-cent spread here. I mean, that's pretty much it for risk on today. Most of it coming from Holly 1.0, and most of the risk on today was coming from the Z trade. All right, looks like the questions panel is all cleared up. So now let's take a little bit of time here, and I've only been doing this for maybe the past couple of office hours webinars about setting expectations for Holly. If we take a look at, and we sum up the point totals here and the trade totals, what do we have? Well, if we add up all the point totals, the 2.34, the 1.43, and the 1.87, we had 5.64 points up for grabs today from Holly generated strategies. Now, keep in mind, when we have differences here in the way the module's finished, well, it throws a little bit more into the equation here. If it's all risk on, well, that's easy because we can just say, hey, if we bought everything and held it, this is what would happen. But even so, if we had 5.64 points on the table today, and we had 21 trades or signals generated, right, which is simply the difference between when the trade comes out and the price that the computer or Holly or any of our alert windows marks. And by the time we pull it up, whether it's manually, that's going to take us a little bit more time, right? But the stock will have moved X amount by the time we pull it up. Let's say we got the alert at 50 bucks, but by the time on a manual basis we pulled it up, sized it up like the pattern, like the risk in place, the signal comes out at 50. Heck, by the time we push the button, we might have paid 50 and 10 cents, right? That 10 cents is what we call slippage, the difference between when the signal came out and what you actually buy or shorted at. All right. So if we just take a rather conservative estimate here of an average of 5 cents of slippage per signal, well, we get $1.05, right? We subtract that from 564, we're back down to what, 459? Okay, so 459 is on the table now, not 564, 4.59 points. If we were executing 100 shares of each trade, getting pretty close, well, then that means we'd be up somewhere around 450 bucks. Let's just make it easy math here. 450 bucks trading 100 share lots. Now, depending on where you trade, keep in mind, the 450 is gross. We still got to pay this thing called commissions, right? So if you're at IB, you probably only ended up paying, let's see, 21, maybe 50 or 60 bucks in commission. So you would have netted around 390. But if you're not at IB and you're at one of the bigger retailers like E-Trade, Fidelity, Ameritrade, and you're paying that $5 a side, well, that's a different story. That's 10 bucks around turn times 21. That's 210 bucks. So if you're up 450 trading 100 lots, got to cough up 210, then we are left with 240 bucks, right? So paying $5 a side on a 5.64 total, realistic expectations after slippage and commission, 200 to 240 bucks on that entire lot of trades, right? So that's a big difference between 5.64 and netting out a little over 2 points. So I hope that resonates and makes sense with everyone because, as the automation comes down the pipeline, as with anything else, trading or anything else in life, it's the expectations that we have to be somewhat reasonable. If we don't have reasonable expectations, well, we're just setting ourselves up for a little bit of what we call disappointment. All right, so hopefully that makes sense to everybody. If I need to sketch over those figures one more time, just let me know. I'd be happy to do that. But it looks like the questions panel is clear. So we can just cruise on to some of the setups that some of my favorite windows produced today. Going back to what I said earlier, simplicity, right? Range breaks, that's why I like them so much. They're simple. They can also be fractal, which means they can line up on multiple time frames, which is definitely a good thing when we're making entries and hoping things are going to go the way we think they are. And then we can also bring in this thing we call volume, which is not the holy grail, but it can certainly help level the playing field when we do see a quality setup. So let us just take a look here. And by the way, all the things I'm about to show you guys are coming from this window here, Turbo Up Family No Resistance. Turbo Up meaning we're getting the 1 minute acceleration as these things crack these levels. No Resistance meaning that everything we pull up from this window and we look at the daily is also going to have the added benefit of popping all-time highs, and then it just becomes about how comfortable is the setup on the daily, and then sometimes we get the added benefit of the range break occurring on the same day as we're seeing a nice range break with a nice snuggly risk show up on the intraday as well. So let's just take a peek here. ZS was a nice one, all right, simply for the quality of the pattern. Now if we take a look at the daily here as well, we did have exactly what I was describing here. We had, make sure I'm looking at the right thing here. Yep, okay. So ZS comes across as this level here is getting breached, right? Stock runs up nicely in the first 15 minutes. Sometimes they run up, sometimes they don't. This is what I would refer to as a good sign. Obviously, there are buyers in the stock. Now, probably a lot of stocks did this today because that's what the overall markets did, and I'm sure there are some that did not. But clearly buyers are in control. What do we call this? Well, we call it consolidation, when things become flat like this, right, for a certain amount of time. Really, what's the underlying cause of a consolidation? Well, buyers and sellers have become relatively equal. Just enough buying and selling to not let it go up, not let it go down, but keep it nice and flat, right? So when these things start to flatten out and flag like this, well, a lot of the times when they punch that new high, they keep going. Now, let's just take the volume temperature real quick here. ZS happened to finish the day with relative volume of slightly over 2, right? That's a good sign. It was high all day. It was high when this signal came out. More importantly, the 1 minute volume was raging as well. So what happened? We got a nice entry and a move higher. We get another period up here where the buyers and sellers become equal before repeating the pattern and making one more little leg higher. Nothing to write home about, but a move from 63.96 up to the top here, 64.44. Not a bad move considering the move that had already occurred. So whether you stuck with what you got, maybe tapped a little bit more here. Once again, what do we have? The 10 period fitting it like a glove, right? Notice what happens here once we flatten out again and have a dip down into that 10 period and then a close. Well, we get a gravitation right back down again. So keep that in mind. Not only can the 10 period keep us in something, but when we see that close or a bar reversal like this, actually a good time to probably think about getting out. So what do we have here? We had accelerated volume as this penetration occurred. We had confirming relative volume, and we also had some nice snuggly risk area. So, keep in mind, trading is subjective. A lot of the times I like to use the prior 15-minute low as my stop loss. But if I'm seeing, these nice tight bars right here, well, maybe I'll just try to eyeball it a little bit further and get most of that range. All right, next on the list, Shop was just really kicking it today as well. Didn't behave quite as beautifully as the prior one. But what do we have going on over here on the daily as well? Pretty much the same type of pattern. We get the run up, get the nice sideways consolidation. We get the alert from here. Hey, it's just simply a new high, right? But keep in mind, stock can't exhibit this pattern without punching that new high, which is why I like to use it. You have to cycle through quite a few of these before you find one with the right timing. But hey, welcome to trading. If it was just as simple as, hey, everything that comes across here, bam, 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 not like that. It would be nice if that were the case, but I guess idealism versus reality here. We have to sort through a lot of junk. Even though we have high quality information streams, we still have to use our eyes and our chart patterns to ferret out the decent ones, because it's all about the timing, right? If I'm eating a sandwich or doing something in the middle of the day and I see it when it's already at the top of this bar, it's painful, but you just have to say, I missed it, right? You want to get it as close to that break as possible. Once again, using, when the ranges are real tight like this, and today it seemed like everyone was. A lot of the times when these things are in momentum and running a lot more, you can use that prior 15-minute candle. If you use these little guys as your stop, you didn't get stopped out on this pullback. If you were super tight with the prior 15-minute, you did get stopped out of this one, only to see it turn and go higher as well. So got a little bit bleedy on the 10-period SMA, and really, to stay in this one, it really just depends on your risk tolerance. A lot of these today, we're throwing some pretty significant pull. But as Steve pointed out earlier, look at how the SPY finished on the day. Not even a 1 on relative volume, even though we had this nice, beautiful action here. Even the SPY itself trying to, did break out of this little pattern, just didn't move a whole lot higher. But on with the show. TTD is next from this list. And once again, just a nice, tight little consolidation area. We get the punch right here. Quite obvious what you could use as your stop losses right here, slightly below these wicks. Once again, I forgot to label my risk and reward areas, but I think everybody gets the gist here. This is our risk area right here. This is our reward area. Looks like most of these are coming in about a 2-banger today. A lot of the times, though, they can produce 3 and 4x risk to reward. This one, keeping in line with the others, we top out up here. If you didn't take the money up here, you had a little bit more time to get out right here. And if you didn't, by the time we got down through the 10 period and the close here, well, still up in the still in the money a little bit, but not near as much. So, today, any day, what's your best insurance against letting something pull back and letting all the profit evaporate? Take half off the table, stick with a stop loss for the second half of a break-even point, and you'll be good to go, because you're ensuring yourself that, yes, this trade will be a winning trade. Now, is it going to be a smaller winning trade or a bigger winning trade? Well, if you don't get stopped out and you get to ride that second lot, obviously it's going to be a bigger, but if it does roll over and sting you for a stop out, well, at least you made money on the first lot. Life's not over. Try again. Yum. And by the way, TTD, backtrack here, 65% above on relative volume. I forgot to look at shop, but I already know. Finished at 1.69. The only one that we're going to look at today that didn't finish with a higher relative volume is Yum. Yum Brands, retail. Hated by some, loved by some, but really, when you boil it all down, doesn't really matter what sector it's in. It's all about the pattern that's being produced and are the metrics in place. So here we get the signal on Yum right here. Didn't have near as big of a run-up that we saw in the prior stocks in that first 15-minute candle, but the pattern remains the same. Barely getting through there, but if we took the trade, hey, we got a great price. If we use the prior 15-minute candle or just what's identifiable in the prior consolidation, we were able to stay in the trade no matter which we picked. And then we just got a nice little march higher. Depending on how aggressive you are, even another chance to maybe tack on a little bit of shares as we got that first pop higher, the small move sideways, and then another pop before it moved higher, and then even another one towards the end of the day. So some of these will present you with 1, 2, or 3 opportunities depending on how quote unquote well they're behaving. I'd say Yum was behaving quite well. I mean, just slowly edging up throughout the day. So whether you stuck with your first entry or added here, or maybe even added some here at the close, 15, 20 minutes or maybe 30 minutes before the close, a great moneymaker in Yum today, and kind of mimicking what the SPY did, not coming in at 9.97, but a 0.96, close to 1, but no cigar. One more to take a peek at here.
Where did those come from? What alert?
Those would all be coming from this window right here, the Turbo Up family, no resistance.
Nice accent.
All right, so the last one to take a look at here, HE. All right, good old HE, Hawaiian Electric Industries. Patterns all over the place today. We could keep digging and keep finding these. It was just, the soup du jour. So nice little consolidation. We get the new high right here. Easily identifiable for our risk. I've already drawn that line. Prior 15-minute candle low matching up with pretty much the bodies of these candles. So we had a low risk and a high reward area here. Did march a little bit higher after a second consolidation, but nothing to write home about. And once again, as with all of these plays, there is that 10 period just fitting it like a glove. Let's see what it finished at. Oh, look, relative volume 1.95. So, coupling a simple range break pattern, and by the way, why is it no resistance? Well, this little guy broke out way back here, and this is what stocks do. Well, this is what some of them do. A lot of the times we can find them as they're, setting up here, they're just breaking out, right? This one's been on a nice run, closing day here, 1, 2, 3, we could just say the prior 3 days, just taking a nice rip here. It reminds me of a couple of the ones that we looked at last week, which I did manage to write down here. Last week, Ascend set up really nice with a low risk on the intraday. It worked. And, I believe it was on the 4th here, which was this day. So it set up real snugly on the intraday for a nice profitable trade. If you held it, you got rewarded, but not even quite up to the top there. But check out what ASND is doing now. This is definitely one you'd like to keep an eye on moving forward, because Once it comes up here and cracks that level, that's a range break. If you can find it exhibiting this pattern, when and if it does that, well, that's what that's when the fractal pattern comes into play. You're seeing the exact pattern unfold on the intraday as you are on the daily. And we can see today it's set up nicely for a range break today. Of course, it's not going to be coming through here because it's not at all-time highs yet, but it's getting very close. Another one that we looked at last week was the SMBR, the sleep number people, right? Set up really nicely here on the 4th on an intraday level, and this one doing the same and even heading higher today as well. So, if you catch them just as they're breaking here, then the possibility of them doing this is definitely there. Sometimes these stocks go in 2, 3, 4 and higher day runs. It all just depends on your risk tolerance and are you comfortable holding things overnight and giving a little swing. Typically, you only do that when you're nice and profitable. You don't want to do that when you're in hope mode and down on a position, obviously. All right, well, let's just take a look at the time here. All right, perfect. We're 7 minutes before the top of the hour. I'm done with my content here. Steve, anything you want to add before I bring Scott in to let everybody know how they can save some money on either an upgrade or a new subscription?
No, other than just a good positive reminder that you've been doing each week for the expectations. Unfulfilled expectations can lead to a lot of frustration, so you've been doing a good job on the auto trading Holly, managing people's expectations for a few weeks now, and that's good. I appreciate hearing that.
All right, sounds good. Well, Scott, if you're ready, we are ready for you, sir.
Sounds great. We have an ebook that's free and it's really helpful. 5 strategies to help you stay in the green in a post-BTFD market. Both Jamie and Steve contributed chapters, so grab it if you don't have it yet. trade-ideas.com/ebook is the URL, and put in your email address and get it downloaded. You can subscribe to our podcast. We put out new episodes almost weekly. Just search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription. Check out the back issues. There's some good ones with guests from late last year and early this year. Also, there's a code like we teased, March On, all caps. It is case sensitive, but that saves 15% off your first year or month of Trade Ideas. So use that on any subscription. You can also use that to do an upgrade from standard to premium and save while doing that. If you have any questions, email us at info@trade-ideas.com. That goes directly into our help desk software. It's the best place to send all your questions. You can also follow Jamie on Twitter at QuantBot, and Steve Gomez is at TodayTrader. Facebook.com/TradeIdeasPros, the Facebook page. We post things that you can share with your friends. There'll be a recording of this up later on tonight or tomorrow, so stay tuned for an email update from GoToWebinar tomorrow with a link to the playlist where you can find it. Thanks, Jamie. Thank you, Steve. Thanks, attendees. Thanks, all. Have a good one.
Yeah, thank you. Bye-bye.
See you tomorrow.